Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about SIS, whether this security company is a buy or not on declines. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about SIS. The company was established in 1985 and is the largest security system service provider of India. It is also into cash logistics and facility management. Clients in various industries like heavy industries, automobile, construction, food and beverages, home consumers, railways, etc. So, a wide gamut of clients are with SIS at the moment, national as well as global presence, and they have global clients in Southeast Asia, Europe, and Africa. So that is also there. The market cap of the company is around 6,000 crores, and it is a leadership in cash management and logistics management. If you look at the numbers, and these are December FY21 numbers versus FY20, so it is spread across 29 states and 630 plus districts. Sales were up by around 8.5% year on year, but the profits were up by around 27-28% year on year. Debt has reduced sharply from last year. High promoter and institutional holding with only 8% free float, that is extremely positive. But a dampener is the return on equity and operating profit margin, which is, 18% and 6% respectively. And I like margins to be northwards of 25%. But here, at least ROEs should be closer to 25%, and those companies are pretty good, especially the smaller companies with such ROEs. So, this is a dampener. Second thing is that the profits were up 28% because of higher demand of security systems because of the pandemic and everything that is going around at the moment, and this could be just seasonal, and this could reduce probably going forward. Things will only improve once you have better demand for such products going forward and consistent in that nature. If you look at the performance, stock is down 36% from the peak of 2018. So 2018 peak levels, the stock has reduced from those levels of 2018. Had fallen sharply last year in March, and debt was high earlier, but it is reducing. So debt is high even now, but it is reducing at the moment. Results are decent. Return ratios are not that great, and that is the concern for me with respect to this company. May not be a consistent performer, as I have explained that the demand for its products has just got increased over the last couple of years. May not be the same going forward for the next 5-7 years, and the valuations are still expensive considering the kind of company that it is. It is trading at a higher valuation than what I would be comfortable at buying. So why it surged last year? Stock ran on news. The news was that they will get more orders, and there are a lot of demand that is coming in for security systems due to the shutdown and the market shutdown and everything. So it was completely in demand, but as things normalize, and once things normalize probably in a year's time or so, these things will subside. Stock had corrected a lot in 2020 February. That was also a reason why the stock surged last year. Management was positive on 2 quarters during work from home. So this is the major thing, that during the work from home season, people went ahead and used security systems for their homes. Apart from using the same for shops, etc., or malls, they were using it for home as well. And so things might change going forward. That's my point in this regard. So demand shot up for a couple of quarters. It might not be the same, say, 1 year down the line or so. So my call on the stock is buy as an investment on major decline. So yes, it is not a bad company. It is a good company to invest in, but the price should be good as well. You cannot buy everything at any prices. So here I would like to buy at least a 20 to 25% decline from current levels. That would be better rather than buying at this. And numbers do not sustain, then you need to sell. If you're holding on to the company and you are seeing that the numbers decline from next quarter onwards, even if you're making losses, you need to exit quickly and get into pure consumption plays or pharma or IT, those top level companies where you are sure that you will be able to make some money and not lose a lot over a long period of time. Here what can happen is, over a long period of time, the stock could sustainably go down, consistently go down over 1 2 3 years, and it could destroy wealth. And if things really go right, then of course, if the demand sustains and if the demand is robust, which I feel, I doubt that it would be, but if that happens, then you will see the numbers surge and the stock price could go up. So here it is like a 50% chance on both fronts. So you have to be careful with the numbers that would come in. So this was my video on SIS. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.